So thank you for joining us in this intimate intimate forum. I see we're getting like an equal results. And in any case, I would like first of all to thank Tina for all her work in making this happen. This session is co-curated with the ACI UK, who are obviously very prominent in the work of the code. So thank you. And last year we did a similar panel. We took quite an amicable approach towards the code, the effort that was made, the joint effort voluntarily by the industry. And after 18 months, there's also room to cast a more critical eye and ask what has been achieved, what are the goals, and what the future holds. I will let Anne do that. Thank you very much. Enjoy the discussion. You have the Slido to ask questions. Thank you very much.
So I also would like to thank the ACI for the opportunity of moderating this panel. I'm a firm believer of code, and next week we also have a crypto-related session on fraud in crypto, which is a different audience, but the ACI is very present in the industry and a big proponent for good conduct and things like the code. I also want to thank Stéphane for stepping in at the last minute. Unfortunately, Adrian Bowler was not able to attend today. So thank you, Stéphane. So the first question that we have, by way of background, from your own experience, what have you found to be the most complex aspect of obtaining consensus on the adoption of the code from within your own firms? Stéphane.
Thank you, Anne. So Stéphane Marlait, I am in charge of market structure and innovation at ING Bank, a large Dutch bank, if you don't know. But also I'm in charge of the ACI FX committee for the global ACI organization. And I think the main challenges for implementing the code in an organization, and I will take for the way where I see it from the feedback I receive, but also my own personal experience, is that the code is 55 principles, and when you try to adopt those 55 principles within your own organization, you have to look at the gap from your existing processes or existing compliance manuals that you have and you adopted in the past. And you also have to look at that from a global point of view for people from working in the UK, but in other jurisdictions as well. And the complexity is that they have their own different principles that they follow in their own jurisdiction. So that's what we did on our side, do a gap analysis and try to change what needed to be changed. And the second challenges for us was the training of the staff, how you make the awareness of the code for the staff and making sure they are trained properly in each location to adhere to the code and to believe in the code principles. The third point, but we'll come back probably later, is the concept of proportionality, to make sure that those 55 principles are relevant to your own organization and your own business model. Some were not for us, so we didn't have to apply to those, but others were very relevant to us, so we look carefully at how do we measure the impact and changes that we need to be made in our organization.
Thank you. Patrick?
So I have two stories to tell here. One in my current role as CEO of SolidFX, a Dutch ECN marketplace for spot transactions. But up till 8 months ago, I was head of trading and execution at a large Dutch asset manager. And in that role, I have been involved in helping the BIS to write the actual code from the market practitioners group. And so I had some insight into how the whole process about the development of those principles were, which I already tried to get my company acquainted with. So during the whole process of the writing, I had internal debates about the principles and how we should be adopting this going forward. So they had an advantage compared to, let's say, people who got the final version of the code, which they had to adhere to. And even with that advantage, it took the company up to date to get adherence and sign the code. In other words, they haven't signed it yet. to give you an idea of how they coped with those set of principles. The difficulty they have is that they see the principles, they understand the principles, and actually we were able to do a gap analysis which says it will take us 60 hours to actually be fully compliant and therefore be able to adhere to the code. But what is the regulatory impact? In other words, the lawyers of the company weren't sure that if we put our signature below, what would be the impact from a legal perspective. And that debate is still ongoing, even now I've left. That's, let's say, an example which I do want to share with the audience to give you an idea of where it can conflict internally. The other, and that was what Stéphane was already saying, is the training part. We looked at which people within that organization have something to do in the whole FX chain and therefore should be trained properly, but also what training should they get in your risk department, in your back office, but also in front office. Front office is the easy part because they speak to market professionals on a daily basis. There are proper courses from the ACI, the ELAC portal, etc. But if you're in risk management or if you're in the back office, it's less obvious what training they need outside of the normal operational kind of due diligence they do. So that was one of those obstacles we faced internally. The good news is in my new role, which started 8 months ago, I had my number one on my to-do list was get adherence to the code signed off. It took this company, and it's a better example, the company is only 20 people big, and I'm the boss. But still, going through the process of really getting people acquainted with the codes, with the principles, and let them understand what impact for them was, and have them write down the gap which they see. That process took us 6 weeks. So within 6 weeks, we had the gap analysis where we said, fine, we are adhering to a code, and this is the gap we have to fill in the next 12 months to be fully compliant with that code.
6 weeks, that's really impressive. That's a very nimble company, almost a fintech.
We like to call ourselves some kind of a maturing fintech, yes. Yes.
Thank you very
Scale up.
much. Nick?
Thank you, Anne. So I'm Nick Downs. I'm co-founder and managing director of Axiom Global Advisors. We're an independent consultancy that help firms with their adoption of the principles of the FX Global Code. So before I begin, can I just have a show of hands from the audience just to see who has actually read the FX Global Code? Okay, so probably less than half of the people. So from our perspective, you know, we work with participants both on the buy side and the sell side, you know, with banks, with brokers, with ECNs, with central banks. So I think the challenge is really, from our perspective, is, you know, we're working with firms who have already decided that they want to go down that process. And it's really about, we work with the senior managers to look at, out of the 55 principles, which are the ones that actually apply to their business. So when I look at the audience primarily at this event, you know, not all of the 55 principles are going to apply to everybody, certainly on the retail broker side. So we work with the firms to say, okay, out of those 55, which are the ones that apply to your business? We look at our target operating model, and we help the firms align their existing policies, procedures, and principles and documentation that they've had to go through already to solve a lot of the regulations that they've, whether it's ESMA, whether it's MiFID, whether it's Dodd-Frank, et cetera, and to allow them to line up a lot of the work that they've already done to the principles of the global code that affect their business. And so actually, if you make that decision that you want to go down the route of signing up to the Global Code of Conduct, you're not going to start from scratch, because a lot of the time, a lot of the work that you've done for a lot of the other regulation, you can actually apply that to your adherence to the Global Code.
So to your point, you're actually underpinning what the other chaps have said is around the fact it's all about proportionality. as to how you actually work with firms to put this in place. Is that correct?
Absolutely, yeah, and I think that's one of the key tenets of the global code. You know, if you're a small corporate, you know, your requirements and your obligations are going to be a lot less than if you're a global central bank or a global major bank market maker. It's just going to be a different level of actually the requirement that you have to go through.
Thank you, Nick. So let's move on to the second question, and I'm going to start with you, Patrick. Beyond signing the Register of Commitments, how do market participants assure and measure adherence to the code across all levels of the organization? Obviously, in your current firm, where there's a small team, this is a different answer. It probably doesn't apply, but in your previous experience, it might be more applicable to us to answer that question.
Sorry, I could hardly hear. There's an echo here on the...
Beyond signing up to the Register of Commitment, how do market participants assure and measure adherence to the code across all levels of their organization?
Oh, yeah. So what we decided internally in this company is we do two courses a year where we have the whole team. Because it's just a small team, we can fit them in one room, and we literally go through the code. That's a promise towards adherence and how we can govern it ourselves. It's really like, okay, let's go through the principles which apply to us, because as an ECN and market maker, only a limited number of principles do apply, and we literally plow through. What are the principles and the gaps we still have? How can we close those gaps?
Okay, so it's an iterative process. You're
I think it should be, yes. It's not like you underwrite it and you change, let's say, a few operating procedures to become compliant and then leave it at that. I think it's a continuous process, and that's have been my voice within the FX committee as well, saying this should be a dynamic process. You start with publishing a first version, but it should be an ongoing process because this market is changing. You have the crypto world. You have so many new technologies entering this market. You need to be flexible, and you have to really look outside the window and see what's new in this world. But to come back to what we do, so yes, we have a process whereby we, every 6 months, we review our processes versus what we have promised by adhering to the code. Next to our operating procedures we have. And I think the good news is that the code has also brought us a few new things. We have been making a few changes to our ECN, which is supportive of the code by creating better governance than we actually had. So even though we already adhered, in that sense, we can see the next level by protecting our clients in a better way than we did before, for example.
Excellent.
Yes, I think for me it's two things for the adoption of this code. One, you have to know that it exists, and you know, we see in this room but globally it's the same, and there are still a lot of people who are not enough aware of the existence of the global code from the buy side, but also from a sell side or more regional players. And this is why the central banks, but even people like us and the ACI are quite vocal to participate into events to tell the world that the cloud is important and it exists. And the second thing is training, and for that you need to have the whole staff to understand the principle of the code and how it applies to them. It can apply to a back office person, to a middle office person, or to a front office staff member. And for the training piece, the ACI has been working since the beginning of the draft of the code to implement two things. One is the ELAC portal, which is e-learning training tools, very flexible, new technology, and people can take it when they want, how they want it. They can pause, restart, and do it. It doesn't take a lot of time to do it. It's full of live example of people from the industry working on specific use cases, so it's more concrete than the document itself of the code. So I recommend to have a look at that. And the second one, it's a global code exam, So a more typical exam that you can take anywhere as well, but then it's a certification and you can say that you pass the exam. So those two tools are quite useful for people to be able to adhere and demonstrate that they have a good knowledge of the code.
So even though they're not necessarily physically trading foreign exchange, for example, they can actually understand as practitioners what it is,
Exactly.
so that the ELAC system.
It's
and the
not only
training
for the
enables-
traders, definitely.
So it's a very powerful tool.
Yeah.
Excellent. Nick?
Yeah, just to follow up on Stéphane's point there, I think that, again, one of the key tenets of the code is not just a front office sales and trading issue. I think if you've got operations people who are subject to sensitive client information, or it's your risk management team or your governance team or your compliance team, they need to really understand exactly how the code affects them. If they're involved in any way in the wholesale foreign exchange market, the code applies to them. So, as Stéphane mentions, ELAC is very comprehensive, and you can drop in, you can drop out, you can follow the course through. You don't have to do it all in one time. Just a shameless plug for Axiom Global Advisors. We also offer bespoke training and education workshops, not just for traders, but for everybody across the organisation to raise the general awareness of the FX Global Code as well.
Thank you, Nick. Let's move on to the next question, which I'm going to start again with you, Patrick. Sorry. In your opinion, has there been specific challenges in gaining adoption when there are geographic disparities or differences in local versus global, as in the way the firm operates? This is probably your previous experience than your current experience.
I'm not sure if I'm the right person to ask for, because I've been working for two companies which were literally based just in one country. So we didn't have the level of complexity which, let's say, an investment bank has, which has offices globally, or a big corporate who has treasuries around the globe. So for us, it was relatively simple to go across the geographic issue. What we did have, we did interact, and in our current role, we do interact with players around the globe. So we have clients who are actually based in Singapore, in Japan, and all the regions, with slightly different cultural habits of how they interact in the FX industry. But we did decide that we should have one set of principles which apply to everybody, which comes a long way from, let's say, all central banks having their own code or adopting the former HCI code, because that created already friction from a geographical perspective. The code leaves room for interpretation from a geographical perspective. If you're a Japanese retail broker and you have a certain way of doing your business on a daily basis compared to, let's say, the UK-based one, there is some room to maneuver around. But from my perspective, we didn't have the difficulty from the real money side. As an ECN, yes, we do have clients from around the globe. But we're not there yet that we can actually enforce them to live by the codes. We can only encourage them.
Yes.
And this is exactly how we did it. We so far made them aware that we have signed the codes. The next phase, of course, is to have an interaction with your clients to discuss.
Yeah, I think there is another way to look at it. In terms of the challenges, it's an opportunity for me, because the Global Code of Conduct for FX is not regulation, right? So it was voluntary basis and guided by the BIS governor of central banks. So it's global by principle. It's not a regulation, so you can adapt how you want to do it. And it covers the whole market around the world in FX. So, which is quite rare, because when you see by definition regulations are local, there are strict rules you have to adopt, and then it creates challenges when you try to run a global organization. Here it's not the case, and we can use that as an opportunity to say we trade FX the same way in London, we should trade it in Tokyo, or in Singapore, or in New York, or in Brazil, or in Spain, etc.
Excellent. Nick?
So just for the members of the audience who aren't sort of aware about the history of it, I just, the global code, for, I've been in FX since a long time, over 30 years, and every single regulation that's come into the market hasn't really been about FX. It's been about, securities or equities markets driven by the US or Europe or the UK, etc. Whereas this is, as you say, a globally agreed set of principles across multiple jurisdictions, but it's also the coming together of the public side, central banks and regulators, and the private side, not just the big major banks, but corporates, asset managers, infrastructure providers, etc., etc. So, whilst you've got this global set of principles, there's different adoption in different countries. So, in India, for example, I think they've mandated that all of their wholesale market participants need to sign up to the code. So there's over 100 banks in India who've actually signed public statements of commitment. If you look at the adoption, I think as of this morning, there's 567 statements of commitment on the public register on the Global FX Committee's website. Nearly 40% of those have come from Japan and Hong Kong. And that's not, and then and actually India isn't even included in that number. So you're seeing different levels of adoption around the world. You're seeing certain jurisdictions mandating that people in their markets have to comply, whereas others aren't. So I think there are probably if you're running a global business, to take into account all their variations, there probably are challenges there. But I think eventually what we're getting to is, and this is kind of, Adrian said this on one of his webinars recently, which I thought was a pretty good thing to say. I think we'll get to the point where actually signing a statement of commitment to the FX Global Code is almost going to become like a license to operate in the industry.
Agreed. Let's move on to the next question, which is around the buy side. So should the buy side clients may be subject to the same adherence rigor as the sell side? And I'm leaving this open.
Okay, I can start. So, I think first we have to recognize why it's important to adhere to the code for the buy side and the sell side. The FX industry have been into a turmoil for the last few years. 14 billion of fines, people going to jail, a lot of lawsuits still happening. So we have this unique opportunity to change that and to bring back the ethic and the trust in FX. And that's why the code is so important for people to do it. And as you see, if we try to project ourselves in the next 5 to 10 years' time, this will probably be the license to operate. You want to be recognized in the FX market, are a strong FX participant, you will need that to say, yes, I sign up to the code, and that's why. That's the same that is happened for doctors, lawyers. This will be for the FX participant. So that's why for the buy side, it's important to engage and try to adapt to those principles. Of course, there is this concept of proportionality. Out of the 55 principles, only a few of them will be relevant for the buy side. So they have to focus on those and sign up to those based on the level of interaction that they have to their market. And we see that a lot of, I'm a member of the ECB FX contact group, and we have buy-side participants who are very adamant to be part of the draft of the evolution of the code to make it even more relevant for them.
Thank you, Patrick.
I have two views on this. One is there is a food chain in foreign exchange, whereby I would say the investment banks are on the top of the food chain with all the intellectual knowledge and property to be able to make an estimate on how adherent they could be towards this code. And then further you go down to the food chain, where you end up with the retail, I think there is the proportionality. I think you have to realize who you are, what kind of an institution you are. And our company, my previous company, has been involved in the writing of the code since day one. We had an opinion about all the 55 principles. Therefore, I said we should be fully compliant and adherent to the code, the same level as a bank, even though we realize we are just a 1,500 people company compared to 300,000 of a big bank. But I do think that you have to put yourself somewhere on the ladder where you think you are in terms
Commitment.
of
you make the commitment.
Correct, and there's also a legal way, because if you are a buy-side client, you have your legal documentation with your bank, where you also state under which capacity you act as a client. Are you acting as a retail client? Are you acting as a professional client? And there is a next level, and that should also give you an idea where the bar is for you.
Excellent. Nick?
Yeah, so, you know, it's not, for me, it's not just the buy side, you know, I think it's across all, you know, market participants. So, you know, if you're an infrastructure provider, as in, you know, if you're, when I look at, you know, in this room or this venue and across the market, you know, there's connectivity firms who probably 85–90% of the global FX volumes are going through their data centers and their pipes and plumbing. You know, they have a massive, you know, relevance to the foreign exchange market. Those guys should be signing up to the principles of the global code. Whether you're a platform or whether you're you know, a retail broker, you know, do your clients really understand how your disclosures, your rule books, you know, how you're handling their orders? But also on the other side, do you really understand your market counterparties? How are they handling your business? Do you understand the rule books of all the venues you're trading on? And I think so. It's not just a sell-side issue. And I think, as Patrick says, as you come sort of starts at the top, and you've seen a very wide adoption amongst the major players who've been involved in the writing of the code, and they've been fined billions of dollars, and they've solved all these problems. And now the next level is, how does it filter down, but also out across the market? I think that's where we're getting to.
So it's effectively an iterative process.
Yeah, it's you know, it's not just a one-stop shop, right? It's just going to carry on, and the code will carry on evolving. And going back to Patrick's point, you know, you've got to review it every 6 months, or, you know, there's working groups on the GFX committee now looking at pre-hedging. They've already looked at last look, and that will carry on evolving. And then I think you need to, you know, you need to adjust your adherence as the code continues to evolve.
Excellent, thank you. Let's move on to the next point. So how are central banks and supervisory bodies supporting the code adoption?
I can start with that because they're the one who initiated that whole effort, right? So it started in 2015, the BIS meeting where there was the governor of the central banks around the world meeting to try to do something in FX. And they agree with that. And then the draft of the code started for 2 years, and Patrick was a part of that drafting at the stage to represent the buy side. I was part of it on representing the sell side. And it was around, I think, 15 buy sides, around 30 sell side member. But the pen on the paper was mainly also with the central banks. So they are very keen to that. The second thing is they have to sign up to the code themselves, so because they trade FX, and so all European central bank in 2018 have signed up to the code now, so it's on their website and it's on the global registers, and the rest of the central bank are mainly of doing it, but they still try to bring other countries to the party now.
So. I was part of the ECB FX committee, and they took over a part of also helping the code to become live. And I think they set the example together with the Bank of England and the Fed by saying, if this code is going to be live as of May 25th, 2016, we will force all our counterparties, which are investment banks, but also all members of all committees, which are in the ECB, Fed, or Bank of England FX committees, to underwrite the code before May 25, 2017. In other words, they gave everybody notice of 1 year to underwrite the code, or else you were expelled from their list/committee. I think it's a very good example of how they could enforce.
It's powerful.
It's the most powerful thing, and they can do this because they're not a commercial body. And I think they only would have had a problem if non-banks would have subscribed, because then they ran out of counterparties. But I think they gave the example, which in my previous role I also tried to enforce by saying, you know what, this is our current list of ISDA counterparties where I transact foreign exchange with. Let's start by looking how many have subscribed in a year's time. Phase 1. Second, have the discussion with those who didn't and ask them why and when they think they will be able to underwrite. And that's kind of the process, I think, which is how you drip down again from the central banks to the investment banks and then further down the food chain again. But I think that they set the example, in my opinion, that this is all they could do to enforce the code upon their suppliers in the food chain.
Excellent.
So yeah, just a couple of things on that. I know there are certain counterparties who used to be on local FX committees, and the central banks have said if you don't sign up, we're not going to trade with you anymore. And they didn't sign up, and they're no longer on those FX committees. So I think that the central banks actually mean it. Just looking at the adoption rates. So, the code was launched officially in May 2017, and there was very slow adoption. It was about 4 or 5 a month for the rest of 2017. 2018, you've seen a real momentum, and in May this year, so the year anniversary of the launch, so a third of, so I think it was 187 names signed up for the code in May 2018 because they wanted to be seen to be signing up ahead of the 1-year anniversary. And then since then, we've kind of leveled out at about 40 or 50 a month ever since. But I think on the central bank side, they've just launched the BIS has launched a specific central bank register in November. So in November, we saw 39 central banks have posted their statements of commitment on that register.
Yes, to follow up on that, it's a good point. There is now central bank registers, but what is more important is there are 12 registers available. Some are designed specifically for certain parts of the organization. So there will be a register for Australia, there is a register for the buy side, some who are more for sell side participants. And what the BIS has done is to have also an index, a central index, to be able to pull all this data. And so if you want to know if your counterparts are certified or not, you can go to the Global FXC website and you can check if the company is registered or not based on the index. So it's a great...
Maybe we need a retail register.
Yes,
I just want to point out that there's about 6 questions already. This is highly engaged audience, so whenever you choose to embed them, yes or no.
I'm just going to wrap up on the last 2 points here. So the last point being, given all the positivity that you've just explained about the central bank and the regulatory bodies, what do you feel is impeding the code? You've said the main thing is training people. What else do you think is impeding the adoption of the code?
I think a lot of people, it's what is it for me? And so first you don't know about it, and then you go to conferences and you hear about it, or you read in the press about it, but then you question yourself, is it important enough for me to adopt to it? And for me, it's this insurance policy to say yes, with all the bad press we had in FX a lot the last few years, it's your get out of jail card is trying to bring your ethic to a new level and to be able to cover yourself, because then you are going to act in a fair play in the market, and you adopt to the principle that even the biggest bank in the world are adopting.
So I had the proper experience by what is slowing down adoption with my previous company, and that was really, they failed to understand what the actual impact would be from a legal perspective. So that was, let's say, stopping them from signing.
Fear.
It was fear, and I know the board of this organization. It's credit investors, which means the whole way of how they look at the world is fear dominated. So that's, I think, one aspect. I think more importantly, and to your point, or Adrian's point actually, about it should become your license to operate. In other words, if the buy-side adoption, the sell-side adoption, sorry, banks and the larger asset managers, pension fund corporates would underwrite the code, and it would be so public, because now we have 12 registers and 1 centralized register, but still I find it difficult to find out from our list of clients which are actually adhering to the code under which legal entity. That's one. So is it helping me already to have this discussion with others? So I can't properly say who has or who hasn't signed because of all the different legal entities. That's, I think, not helping. So it's the other way around, right? I would say if it would be very transparent, if it would be on everybody's website, like there's a stamp saying we adhere, yeah, that would definitely speed up the things. And the other one is, what does it matter to you as a company? A lot of the people who are walking around on this conference, for example, why should they care? So really find for yourself what's in it for me. Why should I adhere? If you don't get an answer to that question.
Okay, we've got 6 questions. We better, they're in front of us here, thanks Tina. So how quickly do you expect the adoption of the code globally when there are still emerging market players that cannot adhere to the tech requirements? So we've covered some of the global. I'm just gonna go through and maybe we can talk about the 4 that we can see up on the screen intermingling. How does code implementation align with or sit with SM and CR obligations? That's UK market specific. And we've talked about training. How do you ensure that training is more than a tick box? So how do you get engagement? And is adoption of the buy side critical for the code to succeed? Avoid saying we tried. Let's go back and how to get. So, look, we have limited time. So,
if I just,
difficult questions.
I can sort of. But one of them, I don't know the question about the emerging market players and they can't adhere to the tech requirements. Okay. I don't know what. So when I think about SM and CR, it's a very UK-specific regulation. So it's a global code, but this is specifically around the UK. So at the moment, that only applies primarily to banks and senior managers in banks. From December 2019, that's going to widen out to any regulated firm, which is essentially saying if you're a senior manager operating in a regulated firm, you're now going to come under the senior managers and certification regime, which sort of means that actually if something goes wrong on your watch, you need to make sure that you're doing everything you can to make sure that your business is operating in the correct way. And the Global Code of Conduct are globally agreed principles of best practice. So I would seriously advise you that you should be signing up to the FX Global Code.
Okay, so and then you all talked about training. So on the training question, how do you get more adoption of training?
So I will give you 2 examples. This morning I was talking to one of the large banks, and the way they do it is they have a training program, and they have a quarterly review with the head of capital market to review the adoption of the code and how it's and the progress they are making. So it's a very formal, with compliance in the room, etc. process.
Is it included in the CPDs? Are they required to?
No, I don't think so, but maybe I'll put them in touch with you. But on the other extreme, you have people who have a lighter process, like the one defined by the ELAC portal from the ACI, where they give their staff the ability to train when they want on their watch, and they measure progress, and if there is not enough adoption, they can go and talk to the staff in question to make sure they pass the exam. What is important about this training is that the goal of the code is going to be evolved over the years. So training is not a one-shot. You have to probably to have another view of it every year.
Which is the CPD point that I just made. Thank you.
Shall I try to answer the last question? Adoption by the buy side critical? I think it is. I mean, when I was at the buy side, I thought it was essential that all my counterparties would actually sign up to the code. So we said, for us, it will be a discussion topic for the next 2 years, but as of January 1st, 2019, we expect all our counterparties to adhere. In other words, you're enforcing it, similar to what the central banks did towards their partners.
That's perfect conclusion for the session. And as far as, so you've got a plan as to what you're going to do next, and this is continuous and proportionately evolving. And do you have something similar in terms of your experience? Or?
Yes, for us, in our case, in my bank, what we do is that we do the training internally, but we did it in a way that all the gray area or the question are recorded as well, and then we work with the compliance officers to be able to give an answer to the staff about what you should be able to tell in the chat, those kind of examples.
That's excellent, because it's interactive, therefore
Exactly.
it gives buy-in from the person.
And we encourage them to talk about those gray area, right? So when we do the training, there is no right or wrong. We say, tell us explicit stories, explicit example. We are not here to judge you. We are here to record those examples and be able to play them back.
So it's not tick box, because people are giving feedback, so they feel they're participating in it, and therefore they know that their feedback might actually be used.
Exactly.
That's perfect. Nick, last one. End of the session.
Yeah, I mean, just going back to Patrick's point about is adoption for the buy side critical for the global code to succeed? I mean, I think the answer to that is yes. I mean, it can't just be the sell side; it has to be the buy side. You know, I think for some buy side firms we spoke to at the start of the year, you know, obviously last year everything was all about MiFID and getting ready for that. After the 3rd of January this year, firms had either done that or they had a program. Spoke to a big investment manager in London at the start of the year, and I said, you know, do you really care about the FX Global Code? And they said, absolutely. For us, you know, our whole world is assets under management, and if we're in a beauty parade with 4 other managers, and if the returns are the same and due diligence is the same and everything else is the same, but we've signed up to the code and other people haven't, we think it's a big tick for us. So they were looking at it as a positive sign for them to their market counterparties that actually their business operated under the principles of best practice.
Thank you. I see there's one question also in the audience.
Thank you. You're saying that a lot of banks have now signed up, and I was just wondering, does that mean that nobody's using Last Look anymore?
That's correct. So Last Look is still valid in the global code context. So yes, people are still using it, even central banks. But you can also get trading activity without Last Look, so two are tolerated. But it's one of the area, if you remember, that one of the principles that is under review. And there is a meeting with Global FXC at the end of November, and the working group working on that specific issue is going to report their progress.
So I think just specifically talking about that, I think one of the great things about the FX Global Code is actually there is now an awareness of things like Last Look, whereas maybe between the buy side and the sell side, that, you know, there were some grey areas there. I think now people are having those conversations. I think there's better discussions happening between execution desks on the buy side and e-trading desks at the market-making banks and non-banks. I think those questions and those grey areas are being resolved. I think when you look at things around disclosures, which is actually, you know, another working group to look at how those can be better standardised, you know, I think if people don't know, then it's a problem. I think if you're trading on a venue where there is Last Look, or it's symmetric or it's asymmetric, provided you know, then you can make a choice. Yeah, I think the problem was people maybe didn't know, and then there was, you know, some not great outcomes. But actually now, I think the fact that people can actually talk about Last Look, and there's disclosures and rule books set in place, you should actually know exactly what you're getting.
In my company, we had a great discussion on this topic, because the way we offer liquidity on our platform is by using Last Look, which is not a bad thing per se, because it actually gives you better pricing than without, at least optically. But it by making it more explicit in your rulebook and publish this on your website, explain to clients how you operate. I think that's the essence of the code, that you make explicit what your operating model is, and therefore your clients have the optionality to not do business with you. So that's how...
So transparency is the key part.
Yeah, but also I had to do some deep searching internally. For me, it was a new company, so I had to find out how do we actually make our business. So for me, it was a very good exercise to do. and now you write it down and you publish it. Thanks for the question.
So look, I'd like to thank everybody on the panel. Just as a last sentence, so we all believe that things have evolved quite a bit in the last 18 months, and positive views about the next 18 months. Any last comments or thoughts on where we might be in 18 months? In the next 18 months?
Well, maybe it is wishful thinking, but hopefully in 18 months' time we don't have to sit on the panel anymore discussing the code, because everybody gets it, why they should have at least read the code and see what's in it for me. So hopefully that's where we are.
Good point.
I just think awareness, one key thing is the FX Global Code is not going to go away. So I think as more and more people adopt, I think the message will get out, further down the market and across the market, and that just has to be a good thing.
Good point.
And yes, for me, it's a voluntary thing, so I encourage everyone to learn about it, sign up to it. It's the first time there have been an initiative organized on a global scale involving buy-side and sell-side and central banks together to do something. So it's the first that we did it. It's worth trying to make it work. If it doesn't work, it's going to be a lot worse for all market participants. So I encourage everyone to do it.
Thank you. So thanks very much to the team here and to the ACI and to the audience. Thank you very much.
Thank you very much.